Today's video is all about investing in real estate and why you should start right now. Let's do it. Andrew here from The Economist, and maybe you've had thoughts about investing in real estate in the past, but you never ended up pulling the trigger. It's a great tool. It can be used to fund vacations, pay for children's education, allow you to retire early, make that big purchase in life that you never thought you had the money to do, okay? All these different things are attainable by investing in just one rental property, all right? Take it from me. I've got a little portfolio that I've built up over the past 5-6 years. Got 3 rentals, my own personal residence. I still go to work 9 to 5. I still do all that stuff. This is all my side business, but it's an income stream that could very well and will replace my personal income one day. So take it from me. You can definitely do this. You just have to get out there and start. And these are the reasons why you need to start right now. Reason number 1, the difference between real estate prices and paid wages for the everyday worker is getting bigger by the year, all right? House prices keep going up and up and up with inflation, and the gap is getting wider between them and the wages that were paid to go to work 9 to 5, all right? Let's look at some data right here. So we can see here, this is based on the StatsCan government website, based on home ownership income, residential and property values. And what I wanted to show you guys, just an interesting statistic here. And it's right here. So it comes in this section right here. House prices in Canada have been growing faster than the household income. Based on the Terranet National Bank House Price Index, house prices have increased 69.1% between 2007 and 2017. So over that 10-year period, median income rose by 27.6% over the same time period. So 69.1% compared to 27.6%. And what does this tell us? That the housing prices are going up higher. The wages are not rising with the same rate. So that gap between housing price and wage just keeps getting bigger and bigger over time. Do we expect this trend to continue? Let's take a look at something else to kind of make our decision a little bit easier for us. The housing price index over time. So the HPI, it basically measures the price change of residential housing as a percentage based on a specific start date. So for this start date, right here, we're looking at February 2005, and there's 4 lines plotted on this chart. The red line is the Canadian average. The light blue is the Greater Toronto area. We've got the Niagara region where I'm from in brown, and then this dark blue line is Ottawa. And what we can see here is the trend has been slowly increasing all the way since 2005, right? The Canadian average. And you have a little bit of a dip here during the recession of 2008. The home prices reflected that. But they recovered pretty well by the at beginning of 2010, and they've been slowly increasing since then. Then you get to 2016, where there was just a huge uptick in the market for housing prices, and then you got the downswing again that you can see in all these markets here in 2017. But again, it's taken a couple of years and it's recovered slowly, and the growth projects that it'll keep going upwards. The one interesting thing to note here on the chart is Ottawa. And it's more of a stable growth pattern. And that's just large in part due to the large presence of government officials in Ottawa that live and house there. And they're not moving in and out of the area. There's not as much, I should say, development being done in Ottawa. And it's just more thought of as a stable area versus the GTA, some aggressive expansion, a lot of migration into Toronto. So we see the house prices just rising up and up and up now over top of the national average. The nice thing too is where I'm from, Niagara region, we're about an hour away from Toronto. We're getting a lot of the urban sprawl around Lake Ontario. People who can't find homes in Toronto are coming into Niagara, which means there's more house sales, and the prices of homes in the Niagara region are being pushed up higher as a consequence of that immigration there. So I expect the trends to continue, and you can see that from 2008 or 2005 all the way up to 2020, there has been a large increase in home prices. This type of gap exists now. I do not foresee this getting any closer in the near future, right? This gap, it's kind of why the rich get richer and the poor get poorer, and that middle class kind of gets destroyed. You're going to fall one way or the other. So if you invest now in a property, you can ride that inflation wave of home appreciation, and you ride it all the way up to the top, and you'll have an asset that builds you wealth long term. Reason number 2, population trends. Especially where I'm from, Southern Ontario, right? We're about an hour away from Toronto. The population density around Toronto is growing by exponential rates, all right? There's some statistics out there. We'll look at them right here, okay? Take a look. So this data showing us the population projections from 2018 to 2046. And we're going to focus in on the GTA and Toronto area. And what I want you guys to really focus on is right now, we're currently sitting in this little region between 2018 and 2021. Population of Toronto hovering right around 3 million people. Projected to be in 25 years. So let's just go for 2021 right now. Let's project in 25 years from now. Population of Toronto is going to go from 3.4 million all the way up to 4.2. And the GTA as a whole, so all the areas around Toronto, the surrounding areas, we're going from 7.8 million up to 10 million. So you're effectively adding 3 million people, which is currently the size of Toronto, into the GTA. So in 25 years, that's a huge amount of people coming to the area. They're going to need places to live. Some of that's immigration, some of that's new population coming in. And now some of that's immigration, some of that's natural reproduction, but a good chunk of it is just people coming to the area, and they need places to go. If you're going to dump another whole city of Toronto on top of where they're at now, just think, project out long term. That is going to do crazy things to the real estate market. All these people need places to live. There's a finite amount of land. Either going to build lots of condos, or they're going to end up going to other areas outside of Toronto, which brings me to the next point here. If they can't stay in Toronto, if there's too many people coming to the area, where are they going to go? Well, here's that little chart of Southern Ontario. Toronto is right in this area here, right down there, okay? And you see areas in dark blue, same time period, 2018, 2046, over a 30% growth rate in population is what's being anticipated over that same 30-year span, 25-year span. Right now, I'm sitting right here down in Niagara, and what happens is they all come to Toronto, all the people, and they obviously can't stay right downtown, so they start sprawling out towards Barrie, going this way towards Whitby and Ajax, coming around the bend, Burlington, Hamilton, down to Niagara, going out to Cambridge, Waterloo, London, all that way. This really drives home the point that the population trends are very favorable for real estate investors moving forward. The population trends suggest that being a landlord and a landowner at this time and in the near future is going to be very, very rewarding. There's a huge demand for rental housing and a very, very short supply. Now, we've seen this in the real estate markets themselves. Whenever there's a low supply but a huge demand, the prices tend to go up. It's the same thing with rental housing. If you're looking to fill a rental with new tenants and there's only a couple spots in town that they can go to rent, the demand on your property is going to be humongous, just huge. You're going to have no trouble finding a good quality tenant just because there's so many people looking to rent, and you being the landowner, you have the luxury of taking the best tenant out there and getting market rents no problem. Reason number 3. This is probably my favorite reason to invest in real estate and why you should do it right now. Real estate gives you 3 different wealth creation sources just from one property, okay? You've got renters paying down your mortgage. That's one, mortgage pay down. If you do it properly, you're going to have a monthly cash flow, which means there's extra cash left over at the end of the month. So the rent, let's say the rent's $2,000, all your expenses on the property for the month are $1,500. You just created $500 a month in cash flow for yourself that you can use on anything you want to. Okay, $500 in your pocket. That's the second part. Third part, there's something called depreciation of the asset. So over time, the house will lose its value on paper. Okay, it's going to depreciate a little bit, and that depreciation you can put on your taxes along with all the expenses that you have on your property, things like your electricity bills, your gas bill, if you do any major repairs like a roof or an HVAC system. All those things get put on your tax return as expenses, and they actually deduct the amount of tax that you have to pay on your rental income. So there's 3 different avenues of wealth creation with one single property, which is just huge in the long run. Number 4, land is finite. They're not making any more of it, okay? Especially down where I am in the Niagara region, there's a lot of protected land. Up and around Toronto, there's just no land left. They're all going up with big skyscrapers and condos, okay? If you can get your hands on a property, you also get to own the land that the property's on. Since they're not making any more of it, it is a finite resource. which means the demand for it will always be there, okay? You can always recycle that asset down the road because the demand is going to be there. It's going to go up over time. We've seen this time and time again, all right? Land is finite. Go get yourself a piece right now before it's too late. Reason number 5, access to credit. Banks will lend you 95% of the home's value. You put down 5, it's your first home. They'll give you the rest of the 95 in terms of a loan that you pay down over the next 25 years, okay? If you buy a rental property and move into it yourself, you can still use that as your primary residence. Put 5% down, have other people in the house with you, paying down the mortgage, paying back the bank's loan, okay? You're leveraging other people's money, number 1, by using the bank's credit and financing. And number 2, if you have renters in there with you, you're also using their money to pay down your mortgage and you're essentially living for free. That's the best case scenario where you buy an asset and it pays for itself, okay? Interest rates are super low right now. Go out, take a look, see if there's something that makes sense for you and get in now while the rates are low and you have the opportunity to do so, okay? Access to credit right now is a huge advantage for real estate investors. We're on to our last reason of the day, why you should invest in real estate and start now, because you can finish earlier. The sooner you start, the sooner you finish, okay? Say you're 20 years old, you're just getting into the workforce, you have to retire at 65. Let's say you buy a rental property right now at 20 years old. Fast forward 25 years, you're 45. Let's say the property was worth $200,000 and it appreciated over that 25-year span. Maybe it doubled in value, okay? You have an asset that's bringing in income every month for you in the form of rental income, or you can go and sell that asset for $400,000. You pay a little bit of tax on that and some closing costs, but that's money that you've just made and realized over a 25-year span. You put that in the retirement fund. Maybe now, instead of retiring at 65, you can go at 55 or 50 or 45, right? That's the benefit of just having just one rental property. Imagine you have 2 or 3 or 4 and scale it up from there. You can retire 10, 20, 25 years sooner just by building a little portfolio, okay? A little piece at a time. That's all the reasons I got for you today to invest in real estate and why you should start now. Leave me a comment below, okay? Answer this question. What is the biggest reason why you haven't already invested in real estate? What is holding you back? I want to know because I want to see if I can help you guys get past those issues and start on your journey of investing, all right? And just before you go, I've got a great free resource for you guys today, a little bit more information, okay? I'll put it in the description below. I'll link it in there. It's called the Real Estate Ready Checklist. If you have any other questions about investing in real estate, this guide will really help you out, okay? It's free. It's just a little checklist that you can go through. Download it, check it out, read it over, tell me what you think. You can also follow me on social media. Check out my blog, www.theeconomist.com. Hope you guys enjoyed the video. Give me a quick subscribe if you liked it. Thanks, folks. See you next time.